Hello, my friends. It's Monday, November 21st. I'm Marv Eisen of Timeless Dollar Trading Academy, and today's short video is just a reminder about price action. And it's important to watch the price action because the market moves at a pace that it might determine whether or not you should enter or exit a trade. And there's a case in point that I want to use as an example today, and that happened this morning, just about 9:30, just after 9:30, I'd say, in relation to the way prices were moving, going toward closing the gap. Now, the prices opened gap down today, faded the gap initially, and then made another attempt, a run toward the gap. And I want to draw your attention to this candle right over here, this candle at 9:51. This is a 3-minute chart, by the way, with 4 points between each horizontal line, just to give you a frame of reference. Prices nearly closed the gap, but didn't. But more importantly, there was a reason to suspect that they would not close the gap, and that was because of price action. And I'm going to show you a little more clearly on the 1-minute chart. This is the 3-minute chart. I'm going to go to the 1-minute chart now. Okay. So here is the time frame that I'm talking about, right over here, where prices, let me expand this a little bit so that you can see it more clearly. Prices were making a run up from 39.56 up to close the gap at 39.73, a 17-point gap trade. But notice over here where prices began to hold off. You see this candle that was expressing hesitancy on the part of bulls to close the remaining few points between where it was trading at 39.69 up to this 39.73 gap. And this is important because the tendency is to hold on until the gap is closed, because as we know, the gap trade closes 70% of the time, 75% of the time. But notice the hesitancy that's shown on this chart. And that corresponds to an overbought stochastic right over here. So when you see price action hesitating and it's nearing the goal, in this case, the goal was closing the gap, might be a good idea, instead of waiting for the gap to actually close, or whatever your target trade is. Doesn't have to be a gap trade. Whatever your target is, when you see prices hesitate and you see a confirming indicator, in this case, I use the stochastic, and by the way, the stochastic is the only indicator I use. It's the only indicator I teach, although there are over 200 indicators that you can mess up your chart with. But price action and the way prices are moving are an important indicator of whether or not your target is going to be met. And in the case that prices are showing hesitancy, exit the trade. So that's my tip for the day. Marv Eisen, November 21st, Timeless Dollar Trading Academy. If you're looking to get some information and education on how to trade E-minis and micro E-minis, check out my course at timelessdollar.com. Thanks so much for watching. Trade safely, and I'll see you in my next video.